Now we are starting the first topic of FR. My sequence is my sequence. I will not follow the book sequence definitely. IAS number 16. The very important IAS. I used to say this, that in paper, you will not expect your FR paper without IAS 16. IAS 16 will be part of your exam, inshallah. Without IAS 16, the examiner will not give you paper, because each and every company have non-current assets, right or wrong?
Yeah.
And IAS 16 is dealing with non-current assets. The name of IAS 16 is property, plant,
And
and equipment. What is the name?
property, plant, and equipment.
Property, plant, and equipment means tangible non-current assets. Tangible non-current asset means all the assets which do have life more than a year and which do have physical substance. This standard is not limited to only property, plant, and equipment. Remember one thing: land will be part of it, property part of it, building part of it, machine, equipment, computer, printer, furniture, fixtures, equipment, and each and every tangible non-current asset, furniture also, cupboard also, yani all the assets, table, chair, all the assets used in the business are going to be discussed in IAS 16. Okay.
Mhm.
Okay. Now we knows one rule from our childhood, that assets increased on debit side, right?
Yeah.
And assets decreases on,
Credit side.
okay, asset increases on debit while they are decreases on credit. This is a very basic one, right?
Yeah.
The question is, the question is, whenever we record an asset, it's going to be recorded on the cost. What?
The cost.
Cost. Now, property, plant, and equipment
Mhm.
at inception, or technical word of IS 16, initially we must record on cost. And IAS 16 suggests that whenever you buy non-current asset, you must record it on the cost. On what?
Cost.
Now, what is cost? The question is, what is cost? So, any idea?
The cost of purchase.
Cost of purchase, okay. Any other thing? So, let me help you. Look, cost means the list price itself. List price, what is list price? When we are going to any showroom, when we are
Mhm.
going to any shop, the barcode and the price is mentioned, right?
Yeah.
Price tag is there, no? So the tag price or the list price is the thing. For example, you went to buy a computer equipment, you found that the tag price was $1,000 or $2,000. Okay, now
Yeah.
$2,000 Yeah. You went to the shopkeeper and you told him that Habibi, listen to me. I want discount. I am, although I am in London, but I am from India and we never purchase things without obtaining discounts, right or wrong?
Yeah.
So I need discount. So gir, too much drama happens. And ultimately the shopkeeper said, oh, bhai, take 10% discount, no problem. So that discount is the reduction in the list price. Trade discount is a discount at the time of purchase. What is trade discount? Discount at
Discount at time
purchase, which is also known as bargaining discount. What is known as?
bargaining discount.
Bargaining discount will be deducted from the list price. Okay.
Mm-hmm.
After that, we have a value. We assume that this is the cost of the asset, but it's not the case. There are some expenses. There are some expenses which are mandatory in nature. What they are? They are
Mandatory.
in nature. Without them, without incurring them, we cannot buy, we cannot acquire the asset. That type of expenses are technically known as capital expense. In our childhood time of FA, we learned what are capital expense. Capital expenses are non-routine expenses. What they are?
Non-routine expenses.
Non-routine subsequent expense or non-routine expense at inception at the time of purchase, right?
Yeah.
Okay. So when we are talking about now the technical word initial measurement, we must add capital expenditure in the cost of asset. Capital expenditures are non-routine, non-routine expenses,
Mm-hmm.
non-routine expenses, or any expense which can bring improvement, improve life or working efficiency of an asset. That expense is known as capital expense. In deep detail in your early studies, you discussed the capital expenditure, right or wrong?
Yeah.
Some teachers said capital expense are one-off expense. One-off means one time, not again and
Mm-hmm.
again. Like I will say repair. Tell me, repair is one time or again and again? Repair.
One time.
Repair. Repairing.
I I mean, you have to do some repairing every now and then.
Yeah, now and then means that is not a capital expense, correct?
Yeah.
So we used to say routine expenses are known as revenue expenditures, right?
Yeah.
Examples are repair. Repairing of asset is happening here and there. So any
Yeah.
expense happens here and there again and again is known as revenue expense. And revenue expenses are not the capital expenses, and revenue expenses will not become part of the cost of the asset. Why? Because revenue expenses are going to be charged to profit and loss. In SOCI, in heading of other expense, we will write revenue expenses. Okay.
Mm-hmm.
Till here, you have any confusion, any problems?
No.
Okay. Capital expenditures are going to be added here. And there is a new thing which is not part of your FA, which is not part of your earlier studies, that is called dismantling costs. What is that?
Disposal cost?
Disposal
No.
cost, dismantling cost, removal cost, same. What I said, the name?
Removal cost.
Removal. Removal cost, dismantling cost, decommissioning cost, all are same. What is there? What is that? Any idea? Removal cost?
Mm,
What is dismantling or removal cost? Removal cost means, just assume we have a oil rig. Oil rig, Madam, you know oil rig?
yeah,
In the bed, in the seabed, there's a huge plant to extract the oil from the sea, right?
yeah,
So we had that type of assume we have that type of oil rig. We are extracting the oil, and there's a time comes the oil got finished. Alas, that's it. Assume this oil rig is in India or this oil rig is in Pakistan. What is going to happen? We will say, Khalas, oil finished, tata, bye bye. We will leave the oil rig over there, right? And we will go home, enjoy, because we earned a lot. We extract all the oil and now khalas, finished. The oil rig will remain in the sea. It's going to pollute the sea. Khalli walli, we don't care, right or wrong.
yeah,
Okay. But now we are in Europe. We are in America, we are in Canada, we are in UK, and we have a sea, we have a oil rig on seabed. What we will do, we will remove it off like that, or we have to remove it properly. We have to dismantle it properly. We have to remove it properly. So the fish, malum fish, the fish
mhm,
cannot bother. The fish cannot feel. Fish can be happy. We need to keep the fish happy. We need to keep the sea. Yani we have to return the habitat, return the natural habitat to the sea creatures. So there are laws that if you are having that type of equipment, after completion of license, after completion of work, you must remove your equipment. And remember one thing, removal of rig is not a easy thing. It's not a cheap thing. It's a damn expensive item. It's a huge expense. There's going to be a huge expense company need to incur in order to remove the assets, right or wrong.
yeah.
So that is a capital expense. IAS 16 is saying you will remove your installed asset once or again and again. So
Once.
whatever we do once is what? Capital or revenue?
Capital.
Cost. So dismantling cost is going to be the part of the cost table and is going to be part of the cost of any non-current asset. How? What are the formulas we are going to use? Present value, this, that, drama. We will learn soon. Any problem till now? Am I clear?
No. Yeah.
Okay. Moving a bit forward. Now I will tell you a story. In this story, I will incur lots and lots of expenses, and you will tell me this expense is a revenue expense or this expense is a capital expense. You will select, okay?
Okay.
Now, assume you are in London, right?
Yeah.
You want to buy a car. You want to buy a car and crown. You want to buy a very, very, very nice car, and you are saying that I will not buy it from UK. I will buy from Japan itself. Wow, you have too much money, mashallah. So you plan to buy a car directly all the way from
Japan.
Japan. Okay. So the car is in Japan. You paid the dealer, you paid the showroom the price of the car, list price. He gave you around 5% discount, this, that, deduct everything, and you pay him online. So what is that? That is a capital expense or a revenue?
Capital expense.
Capital expense. Very good. Now, the car is in Japan and you are in UK. How
Mm-hmm.
the car will come to you? The car will fly from Japan and comes to your home like that or no?
No, I have to pay the.
We have to pay a lot. Now, what? Listen very carefully. The first thing we have to pay, we have to search for a ship. Transport.
Mm-hmm.
I need a transporter either by ship, or if you are very rich, you can have air transport, no problem. Okay.
Yeah.
If you are sheikh from Dubai, you can have it through air. You can send your aircraft. Your car will sit in your aircraft and she comes to your home. No problem. But we are normal peoples. No, we are not sheikh from Dubai. So let the car come through a ship. So you paid the captain of the ship, the transport company, some amount, the transportation charges. Tell me, the transportation charges which you are paying is capital expense or revenue expense? What do you think? Hmm? Transportation charges, capital or a revenue?
Capital is one of.
Yes, you are right. It's one time, that's why capital. Then you are afraid that the car is coming through sea, through ocean. Oh my God. Tsunami will come and your car will destroy. So what you will do?
Insurance.
Aha. That insurance is a insurance in transit. What it is?
Insurance in transit.
Which is one-time payment. It's not like our normal insurance, which you are paying for your car. If you do have car in Dubai or if
Mm-hmm.
you have car in UK, you have to pay insurance every year, renew it, right?
Yeah.
Insurance in transit is bit different. Insurance in transit is an insurance which is one time. You have to pay one time, not again and again. One time finish. When your car land to your port, khalas, this insurance is expired. No need to pay any renewal. No need to pay any premium. Tell me, this is cap or revenue? Which expense is that?
Capital.
Very nice because it's one time. Now the car is at London port. No, London has a port, seaport or no?
Yeah.
Okay. So it's at port now. And you went to the port to take the delivery. But Mr. Uncle Sam is there. Uncle Sam is asking, Komal, how are you? Komal said, I am fine and I know what you need, Mr. Sam. You need tax na, you need import duty na, you need VAT na, you need all the charges na, you need port
Yeah.
charge, you need VAT, you need tax, you need this, you need import duty. Oh my God, Allahu Akbar Kabira. Too much taxes? UK is,
Mm-hmm.
what is this? Around a individual who is a higher band taxpayer, he is paying 45%, 40% of his earning to government. He is paying 20% value added tax. What he left with? Only 40%? Oof. But still people are preferring to stay in UK. Why? Because of other facilities, right or wrong?
Yeah.
Okay. So the taxes, the import duty, this, that, you paid to Uncle Sam, you paid to HMRC. Tell me, which expense is that?
Revenue expense.
You will tell me one thing, the import duty, the taxes on the car, on the clearance of the car, you will pay one time or again and again.
One time.
So I expense which is one time
Uh,
is
capital.
the
Capital.
capital. Okay, very nice. Any problem?
No.
Now the car is in front of you. You went and you feel your car, mashallah. First time you are touching your car. Hey car, how are you? Komal is asking. Car is saying, hi Komal, I am fine. I travel a lot to meet you, ya Komal. Okay. Now there is no fuel in the car. Allahu Akbar. There is no fuel in the car. So you can drive or you can't.
No.
You can't drive it. You need registration. You need to get it registered first. Then you need to put fuel in it. Then you can drive the car, right?
Yeah.
So you hired a recovery truck. Khan Saab, Mr. Khan, come and pick my car on your recovery truck and drop it to the nearest fuel station or drop it to the nearest registration center where I can register my car, right?
Yeah.
MOTs. In UK, we do have MOTs. In Dubai, in UAE, we do have testing centers, the registration centers known as Tajil. In India and
Mm-hmm.
Pakistan, inshallah, after 50 or 100 years, there will be a facility like that. What to do? Have. So the thing is, you take your car to the recovery truck to the fuel station. Now tell me, you will pay some money to Mr. Khan or Mr. Khan is giving you free service?
We will have to pay.
You have to pay. Everything is material, Baba. You have to pay for it. If you are paying, it's a one-time expense or you will incur it again and again.
One time.
So what is that? Cap or revenue? Capital expense or revenue expense? Wow, capital expense. Now you buy fuel for the car and you paid money for the fuel guy. What is that?
Revenue expense.
Very nice. Why?
Because I have to fill petrol again and again.
Again and again. After some intervals, we have to pay again and again. Very nice. So far, so good. Now you drove your car to your home. Pshing. And now your car is at your parking. Now you said, I am Komal. I am a rich lady. Should I drive the car or should I have a chauffeur? What do you think?
I think better chauffeur.
Chauffeur, huh? Chauffeur means driver, right? In easy English, it's a driver. So
Yeah.
Uncle Chauffeur we have, and we are paying him salary, correct? Wala wrong?
Yeah.
Salary to Mr. Chauffeur. Which expense is that?
Revenue.
Why?
Because we're paying him every month.
MashaAllah. Every day. If it is hourly wage guy, hourly base I will pay. If it's a weekly wage, weekly I will pay. If it's a monthly salary, I will pay him monthly. But regular interval, I have to pay him khalas. That's a revenue expense. Who will clean the car?
The garage people.
The garage guys are going to clean the car. They are going to repair the car. They are going to tune the car after regular intervals. So the garage services are what?
Revenue expense.
Revenue expenses. Very nice. Now, what happens? After 1, 2, 3 months, you drove the car, you enjoyed it because it's a damn expensive Ferrari. Okay. Ferrari from Japan. Usually, Ferrari is not coming from Japan. Ferrari is not Japanese brand, but it's my Ferrari, my Mercy. It's my Ferrari, my wish. I am saying Ferrari from Japan, so it's from Japan. What is the problem? No problem. Now, you saw a vlog. You saw a YouTuber called Mo Vlog. Who is,
Mm-hmm.
you know him or no?
Sorry?
Did you watch any video of Mo Vlog?
Yeah.
Okay. He used to showcase luxurious cars and this and that, right or wrong?
Yeah.
Too much dimag kharab. So, you saw a car with some special lighting effects. You saw a car which have stars on the roof. Push a button, star will come on the roof. Push the button, pink roof. The color of the roof is going to be pink. Push another button, the color of the roof is going to be purple. Wow. And now Komal is a rich lady. So what Komal is saying, hey garage wale bhai, Mr. Garage, I need this, that, this. I need disco lights. I can push the button, the light will become disco. Ding, 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 ding. Music will come. Bing, 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 bing. I will push the button, the interior of car became all pink, 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 or purple, purple, purple. What type of expenses are that? What do you think
Uh,
this type of expenses are? One-time expenses? It's a garage guy who is going to do this job. But it's a one-time expense or it's going to incur again and again.
one time.
So as you can say, improving the efficiency of the car. Factory, the factory unit, you are improving it. You are changing the lights. The normal lights are one color, you are putting a disco light. The normal roof is one color, you are putting lights, you are putting stars, you are putting all the drama. So
Yeah.
this type of thing is a improving in efficiency. So that type of thing is a capital expense. I hope you watched. There was a movie which do have cars, and it has around 10 already 10 movies came out. Very famous. I forgot the name. Did you remember?
The
There are,
cartoon.
huh?
The cartoon or the
The
Fast and Furious.
Fast and Furious. Yes, I forgot the name. Fast and Furious. The cars drove by Vin Diesel. The car drawn in that movie are customized cars or no?
Yeah.
So the customization expenses are capital wala revenue.
Capital.
You are right. You can witness the handout page number 1 at your screen.
Yeah.
Since I am speaking, this page is reflecting at your screen. All the expenses which I said almost there. All the capital expenditures, possible capital expenditure, I tried to write here in the green box. You must read after the class, okay? Now,
Yeah.
he knows there is a called something called disposal cost or dismantling cost, which we are aware of.
Yeah.
Example question. A piece of machine has an annual service cost 10,000, annual service agreement of 10,000. Okay.
Mm-hmm.
Now, during the most recent service, it was decided to replace the part. And if I make it short, if you change that part for 20,000, your efficiency, your production work is going to improve, right?
Yeah.
Now tell me one thing. A expense which improve your asset is a capital or revenue.
Capital.
So the 20,000 is a
Capital.
fine, fair enough. What about service cost of 10,000. What is that?
That will be revenue
Why
expenditure.
revenue? You are right, but why?
Because it's annual, so every year we're gonna pay this
That's
10,000.
good. Again and again, we have to incur that cost. A cost which is going to be incurred again and again is a revenue expense. So, one is capital and another one is revenue expense, and we are done with it. This is a very easy question. Any problem?
No.
Now, I will talk about some other capital expenditures which are not very common, which you never studied in your earlier studies, like dismantling cost. Tell me one thing. There is something called building. Assume you are construction company. Who you are?
Construction company.
You are doing construction of building. What you are doing?
Construction of building.
So the question is material like bricks, like cement, this type of things, and the labor. Labor, yani the peoples who are making the building. The material is what? Is going to be capital expense or revenue expense? And the labor who are making the building are the cost, the money, the wages we are paying to labor is going to be capital expense or revenue expense? That is a question. What do you think? Hmm?
Labor will be revenue expenditure. The material is tricky because I used to work in a construction company.
Ah, okay. So now we are talking about IS 16. IS 16 is saying you are making a building, right?
Yeah,
Making a building, you will put material, right?
yeah,
So the material will be one-time cost. Material is going to become the part of the building, the part of the walls of the building, the part of the building or no?
yeah.
So material used in the building is a capital expense. No doubts in it, right?
Uh,
Labor is a big problem. Labor is a big problem. Why?
because it's not tangible.
Because from our earlier studies, like PM, like costing, we used to say labor is salary, salary is a revenue expense. But here is a trick. Tell me one thing. The labor here, you will pay them continuously or you will pay them until they complete the work. Means I am talking about construction labor. Which labor I am talking about?
Construction labor.
Construction labor. IS 16 is saying that listen, Komal, construction labor, you will pay them for the manufacture, for the construction only. And construction is a one-time job. Once the building is ready, then there is no construction worker. There will be no need of construction workers. Am I right or am I right?
Yeah,
So, in accordance with IS 16, if you are building something, if you are constructing something, if you are constructing Burj Khalifa, if you are constructing Dubai Mall, if you are constructing Empire State Building, or if you are constructing any other thing, this construction, if you are constructing London Eye, if you are constructing a wall, a bridge, a tunnel, anything, the construction material and the construction labor is always a capital expense. Got my point?
Yeah.
Now there is a problem. Sometime it happens that material got wasted.
Yeah.
You used to work in construction, so you are aware of material
Mm-hmm.
lost. Material lost yani waste, right?
Yeah.
Wastage. Labor sleeping. Labor sleeping means idle time.
Yeah.
Because we had wrong design, because we have material wastage, because we have labor idle, so the expense of wastage and the expense of idle time is never be allowed to capitalize. You cannot add them. They are revenue expenses. Capital expense is the material used in construction. Capital expense of material, capital expense means the material, the amount of material which is used in construction, not the wastage. Wastage is a
Mm-hmm.
expense. Labor, the work, the money we are paying them for construction only, it's a capital expense. For the idle time, for some drama, for this or that, it cannot be a capital expense. Got my point?
Yeah.
In the exam, in the paper, it will be mentioned to you very clearly that how much material you pay for construction, how much wastage is there. Now, in my handout, there's a big question. And with the help of this question, the first topic of IAS 16 will be completed, which is capital expense and revenue expense. There's a very small question, right?
Mm.
Very small question. You need to calculate the cost. Cost. Yeah. Okay. Always we read the requirement first. Three zeros are hidden. And remember one thing, throughout our journey of FR, we will always we will always hide three zeros. Okay. One by one, we will read all the expenses: purchase of land, stamp duty, legal fees, site preparation, material. I am saying
Mm-hmm.
again and again, material is there. Then I
Yeah.
am labor is there. Architect fees, journal overheads are also there. About the labor, there is a note. About the labor, there is green note. About the material, there is yellow bullet point. Okay.
Mm-hmm.
I would like to read, I would like you to just tell me the land itself is a capital expense or no?
Yeah.
We need cost means we will add the cost of asset minus trade discount plus all types of capital expenditures. So land itself is a capital expense. Any problem?
No.
The duty, stamp duty in UK, when you buy a land in order to take it on your name, in order to register it under your name, you have to pay stamp duty. It's a registration tax.
Yeah.
So what is that? One time or again and again?
One time.
One time. Okay, finish. Legal fees, the lawyer fees, who is going, this running, going, coming, going, finishing the registration. One time or again and again?
One time.
One time. Okay. Material, I will keep it blank because there is a bullet point. Labor, let
Mm-hmm.
leave it. Architect, uncle, architect is a guy who is designing, right? You used to work in construction. Tell me, you pay
Yeah.
architect time or again and again?
One time.
Designer, no? A person who designed the Burj Khalifa, he is not getting every month salary.
Yeah.
Got it once, he submit the design and Sheikh loved it. Khalas, finished, right? Journal overhead, what do you
Yeah.
think? Journal overheads are
Fixed costs.
revenue expenses, right? In costing, fixed costs, in
Revenue.
financial accounting is reoccurring expenses, okay?
Yeah.
Now talking about material. 100,000, three zeros are hidden, so
Yeah.
$100 million of cement, bricks, steel we use in the building. What is bullet point one? Can you read it bit loudly so it will be okay? What is the bullet one? This one. Material cost. Hello. About the material cost. What it says. Yeah. What is said about material? You already read it. That
Yeah.
it found that 10 million of material
Mm-hmm.
was spoiled, and further 15 million of material incurred because of wrong design. So one thing we said earlier in today's class that material used is a capital expense. Any wastage, any drama,
Mm-hmm.
it never be a capital expense, right? So it's
Yeah.
10 million means 10,000, no? 10
Yeah.
million. Three zeros are hidden, so 10,000. And 15 million. 15 million, three zeros are hidden means 15,000. This both
Nothing.
it because of some problems, right?
Yeah.
Its problem, drama can never be capitalized. Remember that. Only
Mm-hmm.
capitalization is the material which we put, which we incurred for the building itself without any spoilage, without any fault, without any drama, without any vestige. So here two dramas are there, khalli walli both dramas. We will remove them and we use the net, the pure material which we incurred for the building. Khalas. Got it?
Yeah.
What about Miss Labor? Labor, we incurred 150,000. Oh, it's a million as well. They are saying because of problem, wrong design, the work stopped and we paid 9 million. Yani it's you can say we are paying but we are not getting work from labor because of the contract. Idle time we have to pay, no?
Yeah.
So did labor was working on the building or just they were sleeping?
They were working. They were work. They couldn't work because of this faulty design and
Couldn't work, no. They cannot work on the building. So what do you think? This 9,000 you should keep it capitalized or you must remove it from the capitalized cost?
remove it.
I remove. Khalas, finish. Any problems?
No.
If you add them up, you will have cost of building. This is going to be initially measured and will be reported in your SFP as a non-current asset. Now moving forward with IAS 16. Today we will start with a very basic thing, very journal thing, which is depreciation. What is depreciation? Depreciation is a wear and tear of an asset, right?
Yeah.
Depreciation expense. Depreciation expense is nothing but a wear and tear. wear and tear of an asset. Am I right?
Yeah.
In our childhood studies, a teacher told us why depreciation? Because of prudence and matching concept. These both are the accounting principles. We will discuss them in IS 1, but you already knows them. Matching concept, if revenue is there, you must record an expense which you incurred in order to earn the revenue. For example, asset is generating revenue for us, asset is generating income for us, so we must record the wear and tear of an asset. So the expenses cannot be understated. Prudence. Prudence means expenses should not be understated. Assets should not be understated. Income must not be overstated. So
Mm-hmm.
this expense and income must be matched. If an asset is giving economic benefit to you, you must record the wear and tear of the asset, which is known as depreciation. Got it or no?
Yeah.
There are many methods of depreciation, units, hours, all are okay. But basically, there are two methods: straight line method, diminishing or reducing balance method. In your childhood of accountancy, you learned the formulas. What is the formula of straight line? The formula of straight line is we will take the cost. We knows how to calculate the cost, huh? This is the cost which we learned. List
Yeah.
price minus rate plus all capital expenditures. Cost minus scrap value or residual value or salvage value, same thing. Scrap value in our language, kabadi value. You know kabadi?
Yeah.
Yeah, okay, very nice. The scrap guy, scrap dealer. The scrap dealer. If as it is not in no more in use, we used to call someone, hey man, hey mate, come and take this acid khalas, we don't need it. So khalas, this mate will come and he will take it right or wrong.
Yeah. He'll take it.
Okay. There is another formula. There are two formulas of a straight line. The second formula of a straight line from your childhood studies. Cost minus scrap value into percentage, which is known as rate of depreciation, right?
Yeah.
The characteristic of a straight line method is that straight line method is always producing a same result. Any problem?
No.
Okay. Reducing balance method, there is a formula for reducing balance method, which is cost minus accumulated depreciation. Accumulated depreciation means the all previous depreciation, the sum of total depreciation which is being charged till today. Got my point?
Yeah.
Only one formula for reducing balance method. We will not free it. Okay.
Mm-hmm.
Till here, any problems?
No.
Okay, that's easy. Now I will write an example. This is a very basic example, but depreciation is going to be part of your exam because assets will be appear in the question paper. So definitely if assets are there, depreciation need to be computed. So I will write a very basic question. I am giving you a cost of 100,000. Okay. Let's suppose the scrap value is 10,000. Life is 20 years. And number one, I would like you to compute depreciation expense as per straight line method. What is the formula? Life, no? The
Yeah.
formula. Let's suppose we are calculating it for let's suppose for the year ended 31st December. This I just suppose that this is the year end, okay? Cost is 100,000.
Mm-hmm.
Value, scrap value 1,000. Life is wow, 20 years. What answer you will get?
4,500.
Very nice. Now I can say that okay, let's calculate depreciation for the next year, which supposed to be 25. And I used to say, okay, no problem. Let's calculate the depreciation for the third year, which is 26. What you will do? You will again write the formula, or you will tell me, sir, alas, finish. Simple and easy. Per annum
Yeah.
depreciation is remain same because it's a straight line method. Any problem?
No.
Okay. B. I will say calculate it like 5% reducing balance method. Okay. Now how to do it? The first year, 31st of December 24. I hope now your mind is recalling FA. It's coming in your mind or no? FA.
Yeah. Yeah.
A very basic accountancy is coming. Your mind is going in a area of yani your memory that is bringing up ting 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 ting. Wake up. Reducing balance is here. So what is the formula?
Cost minus accumulated depreciation.
Cost is 100,000. Scrap value khalli walli, no need.
Mm-hmm.
Rate is given 5%. Accumulated depreciation. What is the meaning of accumulated depreciation? I just said it.
Is adding together all the depreciation from previous years.
Very nice. The sum of the previous depreciation, the total of previous depreciation, adding them up, adding up all the previous depreciation is known as accumulated.
Accumulated
This is the
depreciation.
first year. That's the first year of the life of the asset. So accumulate is 0. Am I right?
Yeah.
Answer is 5,000.
Mm-hmm.
Look very carefully. Second year. How much accumulate we have? This is not the first year. That's the second year. How much depreciation charged till now previously?
5,000.
5,000. Here it is. Ding, 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 ding. So what is the answer?
4,750.
Very good. Now the thing is, we are at the yeah. Ding ding ding. Finish. Tell me what to do, how to do, what to deduct, what to add, what to do.
Minus 100,000 minus 9,750.
Very good. Accumulate depreciation means the sum of previous depreciations, right?
Yeah.
So previous means this is previous, that is previous as well. Both are previous. So you can add them up or deduct, or you can do like that. How I did, both acceptable. Am I clear in that or no?
Yeah.
Answer is
4,512.50.
should I round it off? It's okay, no?
Yeah.
Any problems?
No.
Okay, fine. That is a very basic example of depreciation I did. I will do again a recall of FA. The accounting entry of depreciation is Depreciation expense debit. Provision for depreciation credit. Am I right?
Yeah.
Depreciation expense will going is an expense. So it's going to be profit and loss, SOCI, right?
Mm-hmm.
And accumulated is going to be part of SFP where it's going to be deducted from the cost of non-current asset. Am I right?
Yeah.
Any problem?
No.
Okay. I will send you the file, so you must note it down after the class, huh? Or if you want to note down now, we can wait and you can note down. What you prefer?
I revise it after the class. So
That
I make.
Yeah, so the things will be recalled. This is my I will also prefer that to the student that when I am taking class, everything is at your screen. Just focus and see you are understanding or no, or help me in calculating the answer. Whenever I told you calculate, you do it. Otherwise, whatever I am teaching, you must redo them, must rewrite after the class. In that way, you will sit, you will study, and the things will be, inshallah, memorized in your mind. Back of your mind, somewhere it will lock and it will help you in the paper. Got my point?
Yeah.
Okay. But the condition is you will do it before the next class, huh? If no,
Yeah.
then no fighter, then it's a big disaster. Okay.
Yeah.
Now, this is what we discussed with me. Now, I will talk about disposal of non-current asset. Again, a topic from your past studies. Disposal of non-current asset. Disposal of non-current asset means we are selling the non-current asset which we had, right?
Yeah.
Always remember, if we are selling an asset, either we will make gain or either we will have loss. Might be we incurred gain, might be we will incur loss. So how to compute it? In your A levels, in your O levels, or you learned a disposal account, but here we are in FR, so we don't need disposal account. What we need a trick to find out. The trick, the format I am presenting you is cost minus all previous depreciations. The answer will come. This answer is known as carrying amount, remember?
Mm-hmm.
And the carrying amount is the remaining economic benefit. That much economic benefit we are expecting from that asset. That is the carrying amount, okay?
Yeah.
And we will have a selling price. Sometimes we are selling it for the cash. Sometimes we are exchanging the asset. Exchanging the asset means trade in value. Trade in value, selling price, exchange value, same. Okay?
Mm-hmm.
The is going to be positive or negative. And this will be known as gain or loss on disposal. What it will, we will see now. I am writing an example question because it's a very basic thing which we are discussing because we are revising FA as well and we are preparing for FR. So let's
Mm-hmm.
assume, give me any name of your friend, any friend name.
Uh, Samira?
Okay. Miss Samira. Miss Samira, purchase a machine. Tell her that Samira, you are a rich lady, you don't know. You bought a machine last night for $100,000. Wow. And she bought it, let's suppose, on 1st of January 24. And I used to say this. 20% reducing balance method, and on 31st of December 25, she sold it for, let's suppose, 80,000. We need to find out the gain or a loss, okay?
Mhm.
Now what to do, how to do. Be careful. What is the cost? You bought it for how much?
80,000.
Huh?
No, she sold, yeah, 100,000, 100,000.
100. The working will be for acquisition. We will have carrying amount. Am I right?
Yeah.
We need carrying amount at the date of sale. Which date she sold it off?
Uh, 31st December 25.
So the carrying amount supposed to be, we need carrying amount for which date? At the time of disposal, no?
Yeah.
Always remember it must be matched. If it is not matched, it's a problem. We need carrying amount and selling price for the same day. Otherwise, we will not be able to find out a gain or a loss. Okay?
Yeah.
Now tell me,
Mhm.
how many years it passed?
Uh,
I need accumulated depreciation, no? So how
yeah,
many she
two
bought
years.
this date? She sold it on this date. So how many years it passed?
Two.
So the method is which one? Reducing balance now.
Yeah.
First year is 0 and like this. Second year will be like this. Am I right?
Yeah.
Accumulate means total of the depreciation at the time of disposal. The total depreciation at the time of disposal is 36,000. Am I right?
Yeah.
What is the answer now? If you did.
64,000.
Now my question to you, is it gain or a loss?
It's again.
Wow. How you can say it's a gain?
Uh,
You are right, but how?
Cause the carry forward amount is less than the selling price.
The carrying amount is below the economic benefit expected faida. Expected benefit.
Expected.
Expected benefits are 64,000 while the
Mm-hmm.
price is 80,000. Kabhi khushi
Yeah.
kabhi gum. We are happy or we are sad?
Samira is happy.
Samira, Miss Samira, excuse me, there's a good news for you. What is that good news? That you made a gain, huh? Oh, okay. Wow. So Samira is happy and she's your friend, so you are also happy. Gain on disposal. By how much?
16,000.
Any problems?
No.
Okay, note down. Oh, sorry. Look at it. Any confusion?
No.
Fine. That was the very basic of accounting which we just discussed. I didn't discuss anything new till now. In today's class, 22 minutes passed till now, and we didn't say discuss any new thing. So let's begin with the new thing, which is completely your syllabus, which is a new thing. You never, never learned that previously. The new thing which we are going to discuss today is dismantling cost. Dismantling cost, easy. Removal cost, The cost, I already told you yesterday, earlier,
Yeah.
earlier sessions, that removal, decommissioning, dismantling is the same thing. And this is the cost of removing the asset after use. Am I right?
Yeah.
How to deal with it? How to deal with it? So we will not say how to deal with it. We will call ting ting. Hello, IS 16. How are you? IS 16 is going to tell us, I am fine. Why you call me? So we will tell him, IS 16, I would like to know the treatment of removal cost. So you know what IS 16 replies? IS 16 replies that okay, it's a capital expense. Okay, what is that?
Capital expense.
Means add in the cost of non-current asset, right?
Yeah.
This is easy. And IS says at present value. Oh, that's the drama what IS did. Present value. That is the thing. You cannot take the removal cost like this. Removal cost is giving this. We will take an add. No. You have to convert it. You have to convert it. You have to calculate the present value. Got my point?
Yeah.
My question to you, did you ever heard or did you ever calculate in your previous studies the present value or no?
Yeah.
Okay, what is present value?
Is the current value of an asset.
Um, Present value we are using the present value when there's a time delay occurs, when there's a time delay. Got my point?
Yeah.
Okay. How to calculate the present value? Very carefully understand that, please. Why? Because this one, the present value calculation, will come in your syllabus of FR again and again. It's not only in IS 16. It's going to be come in different ISs. Different standards will be there. So be careful and learn it very carefully. The present value will be calculated as you will have cash flow, the
Mm-hmm.
removal cost, yani the amount, the actual amount, okay?
Yeah.
You will multiply it with the discount factor. With what you will multiply it?
Discount factor.
You will get what?
Present value.
Okay. Now, cash flow will be given. Present value will appear. The drama, the problem is discount factor, right or wrong?
Yeah.
How to calculate?
1 over rate of interest.
Yeah, the formula is 1 over 1 plus
1 plus.
rate of interest power n.
Yeah.
R is R is cost of capital. Cost of capital, any rate of interest, cost of capital will be given. And N means number of years.
Yes.
So that is the discount factor formula. Any problem?
No.
Okay. Now, I'm going to take a question from handout. This is in my handout, this question. And yesterday when I was explaining you what is Removal cost, I used an example of oil rig. So the same thing is going to be applicable in this example. Just we are reading the question together. Okay. If
Mm-hmm.
an oil rig was built in the sea bed on the seabed, the cost to be capitalized is likely to be the cost of constructing the asset and the present value of the cost of dismantling it. That's what I explained the rule, which I just explained you earlier, right?
Yeah.
The next one is if an asset cost is this much, 10 million is the cost of asset and removal cost in 20 years. And after 20 years, you will pay how much?
4 million.
Okay. Present value will be to be calculated. The interest rate is given, right? First of
Yeah.
all, I would like to have the oil rig. The oil rig cost. That's what I need. We know that the cost can be calculated as follows. You will take the cost of asset, which is how much? 10 million now.
Yeah.
I our rule is three zeros. So like this.
Mm-hmm.
No discount, no trade discount, nothing, no drama, no film Hindi, no Shah Rukh Khan, no capital expense, no Salman Khan. But we have removal cost, which is also known as dismantling cost or decommissioning cost. So
Yeah.
removal cost is there. We need to add it up because it's a capital expense. Am I right?
Mm-hmm.
But we need to do the working. The working is how much you will pay the cash flow. Just here you have the formula cash flow,
Yeah.
dismantling discount factor, present value, right? Cash flow
Yeah.
is, am I right?
Yeah.
Factor, discount
One.
1 over 1 plus interest rate or cost of capital 5% divided it with 100. So whatever it will come, you will put in the formula because
Yeah.
percentage can never become part of formula. And how many years? Wow, 20 years. I need your scientific calculator. Without scientific calculator, you can't be able to solve it. Very difficult. Yalla, yalla, try. Yeah. Anything?
Calculator is not working.
Mm-hmm.
Oh. 1,507. 1,508.
1,508. 1,1,508 will be my cost of the asset. Any problems?
No.
That is the initial measurement. Initial measurement means at the time we acquired it. At the time when we acquired it, we will record it at that value. Any problem?
No.
Okay. Now, moving a bit forward. Moving a bit forward. What will happen at year end? What is going to happen at year end? Year end is subsequent measurement, no? What is year end? Is a subsequent measurement. What I will
Mm-hmm.
look, this is my asset side. Under the asset, it will be oil rig, which is 11508, and the life is around 20 years now. So if
Yeah.
you there is no method defined, so it is straight line method divided by 20. Answer is
Uh,
the depreciation of the year.
that is the minus 575.40.
575 rounded. So what is the carrying amount to be reported in SFP for the asset?
10,932.9, 10,933.
So that is the first side, right? First side, and we found out what is going to be the value in SFP for the asset at year end. Any problems?
No.
Now, now there is a problem. Now there is a huge problem. Be careful, what I am saying is a new thing for you. The thing is, the removal cost, you put it in the cost now. You made it a
Yeah.
capital expense, no? You are assuming it's a capital expense. Correct me if I am wrong.
Yeah.
Debit capital expense is, are you paying it right now or you will pay it later on?
Later on.
Later on. So the problem is the liability is there now. It's a payable, no?
Yeah.
Okay. So the problem is initial measurement. Assume, just assume, I am writing the year ends. It's not mentioned in the question. I am writing to make it easy. Assume we bought it, we constructed the rig on January 24 and the year end is 31st December 24. Okay.
Yeah.
Here we can say we had oil rig 1st January 24, oil rig debit because asset is coming. And asset coming, asset increases on debit side. Am I right?
Yeah.
Assume we constructed it for cash. We paid cash, fulus, money we paid for it. So tell me, cash or bank is going to be credited by 10,000, right?
Yeah.
Why 10,000? Why not 11508?
Because 11508 we're gonna pay after 20 years. I mean, it's the present value of something we are gonna pay later.
That is the liability, no?
Yeah.
That is the removal cost payable. 1508. Am I right?
Yeah.
That is the entry. Now the year end appears. At year end, you will have a non-current liability. Non-current liability of removal cost. Am I right?
Yeah.
Problem. My problem is I called IAS and I said, hey, IAS 16, are you still alive? IAS 16 said, yes, I am. So I asked him, IAS 16, are you crazy? Are you crazy, IAS? Why I am saying that? IAS is in shock. So I am explaining that, hey, crazy IAS, listen to me. Wallahi, the real amount I will pay is going to be 4 million or 4,000, right?
Yeah,
But we recorded it at which value?
the present value.
Okay. So the real payable amount is 4,000. Real payable amount is 4,000, but we recorded it for 1508, correct or wrong?
Yeah, we recorded as 150.
So there is a mistake, no? We are saying, hey, IAS, there is a mistake. Mr. IAS, you did wrong. Standard, you are wrong. Oh, Allah Akbar. We are saying standard, you are wrong. Standard will kill us, right? So we are claiming to the standard. Mr. IAS 16, there is a problem. What is the problem? That the problem is the real amount is 4,000, but we recorded it as 1508. So what about the difference? So IS said, Habibi, Habibi, come to Dubai. No? Okay. He said something, thoda, 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 a little, 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 too much. Nahi. Thoda, thoda means IS is saying, okay, we are aware of that there is a problem.
Mm-hmm.
The problem is actual payout is going to be 4,000, but we recorded it at 508. So
Yeah.
IAS, how to solve it? So IAS is saying, every year you increase your liability. Thoda, 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 thoda in Urdu. Thoda, thoda, little, little. Every year you will increase your liability with little, little amount. Every year you will increase your liability with little, little amount. And in 20 years time, automatically, in 20 years time, inshallah, automatically your liability. Wow. Wow. This is the, yes, that is called unwinding of discount. What is called unwinding? That is a topic called
Discount.
unwinding of discount. Unwinding of discount means little, little, thoda, thoda, little, little, thoda, thoda. Every year you will increase your liability with it. And how to compute this thoda, thoda, which is known as unwinding of discount. So there's a formula for that. Okay. Can you hear me?
Yeah.
The formula of unwinding. The formula of unwinding is very formula to memorize. The formula of unwinding is you take the and you multiply it with the cost of capital with the interest rate to get the unwinding amount. What you will do,
Mm-hmm.
unwinding, you will increase your liability every year. And for example, the liability was 158 at the inception. No? Initially, it was 1508. Am I right?
Yeah.
This is 1 year end. First year is ended. So with the thoda amount, small amount, little amount is going to increase. The formula is in front of you. You will take the present value and you take the rate. The cost of capital is how much?
5%.
So what is the 5% of it?
Um, Only 5% of it.
Yeah, yeah, yeah.
75.4.
70.
5.4.
So if I round it, it's okay, 75.
Yeah.
So add them up.
1583.
This is your liability amount at the year end in SFP, and that the above on top, the asset amount at SFP. Do you have any confusion? Do you have any problem in it?
No.
Look at it carefully again from the beginning till here and see if you have any question coming in your mind.
No. All clear till now.
Okay. Now I am going to your study hub, ACCA study hub. And we have a question from there about this dismantling and this removal cost. That is the
Mm-hmm.
new thing which students of financial accounting never studied earlier. Okay, if you study any other paper like finance related paper, financial management or that type of paper, okay, you are aware of how to compute the present value, this, that. But unwinding of discount and these things are very new to you. Okay. Now the problem is
Yeah.
this 75 is unwinding of discount now.
Mm-hmm.
Every transaction have two impacts. The first impact is going to be added in a removal cost. Removal cost, you added it up, right?
Yeah.
This is the credit impact. What is the debit impact? The debit impact is going to be, it is going to be charged in profit and loss as an expense, and that expense will be known as finance cost, interest. Finance cost debit, removal cost credit, finance cost debit, removal cost credit, and that is the rule stated in IAS. Like taxation, what I'm saying, like taxation, IAS and IFRS are also rules. We will follow them. We are here to learn the rules written in IAS or IFRS. We are not here to argument why. Why like this? Why not like this? No, we are not here to do this. We are here to say, okay, IAS, you are a big man. What you said is correct. We agreed. Khalas. No need to do any drama. Okay.
Mm-hmm.
So, what I said now, that dismantling cost, removal cost will be unwind every year. And that unwinding is going to be debited in the cost of assets. Sorry, it's going to be debited in finance cost and is going to be credited as a liability. Any problem?
No.
Okay. Now, 1 second. That your screen is from your study hub. It's in study hub. ACCA's official study hub have this question. Okay. Now
Mm-hmm.
we will learn the dismantling cost. Remember one thing, I used to teach dismantling cost while I am teaching IS 16 completely. In your study hub, you will find this question or the discussion about dismantling or removal costs when you will learn, when you will read IS 37. No problem. Same. What we learned here in IAS 16 is remains same when we will discuss IAS 37. Okay. We saw dismantling, we knows. What we know is dismantling or removal is capital expense need to be added in the cost of non-current asset. Halas, right?
Mm-hmm.
In the 10 years time, you are committed to incur the 10 million, right? Asset purchase this. Interest rate is that. So first of all, 1st January 2006, we need to find out the present value of dismantling cost. Am I right?
Yeah.
Formula is cash flow, which is 10 million, 30, I hide it, into discount factor 1 divided by 8% means 0.08. Power is 10 years, so 10, right?
Yeah.
I need help in this answer. Three zeros are rounded by myself.
Yeah, I got the same answer.
Okay. Now, this is initial measurement, no?
Yeah.
Year end, year ended 31st December 2006. Under the heading of non-current liability, we will have removal cost or dismantling cost payable, same thing. It
Mm-hmm.
is 4632, but it's year end, so thoda unwinding is required, right?
Yeah.
Unwinding formula is present value multiplied by a percentage. Halas?
Yeah.
Answer is
370.
wow, 370. Very round answer. So the final answer, is it 370? Okay, so the answer is
5002.
5,000. Wow. In SOCI, this is going to be the finance cost. There is going to be a finance cost of 370, which is an expense. Am I clear?
Yeah.
Okay. This is the first year, which we also did in our previous example. The main concern why I'm doing this, the SFP for the second year. Now, be careful. SOCI and SFP for the second year. First year is okay. We are aware of. We already did one question earlier as well. Now, be careful. Liability, I told you, thoda, it will increase. Am I right?
Yeah.
The CD of the closing of previous year is the opening of the next year, right?
Yeah.
Thoda, I need to increase. Little, we need to increase. Unwinding 8%. 8% will be applied on. Is it 4632? No. 4632 is old one. What is the new one?
5002.
Aiwa. Answer is
400?
400.
It's 400.16, but you said to round it.
Okay. And finance cost is going to be the 400, right? You are
Yeah.
with that slowly, third is increasing. Third year it will increase more. Like if you want, I can do it. The third year. Finish. Removal cost. The closing of the previous year is the opening of the current year, right?
Yeah.
Plus unwinding at the rate of 8%. Thoda. This is going to apply here. Am I right or wrong?
Yeah. 432.
Wow. And our answer is 5834. Finance cost in profit and loss is going to be 432.
432.
Yeah.
Yeah.
You are witnessing thoda, little, the removal cost is increasing. And you will see if you have time, just try to drag it till 10 years. I finished
Mhm.
1, 2, واحد اثنين ثلاثة 1, 2, 3 Akrobo
Mhm.
3 1, 2, 3 I finished 3 years. If you do 4, 5, 6, 7, 8, 9, 10, at the end of 10th year, you will witness because of rounding, there will be a minor difference. But if there is no problem of rounding, you will witness the amount of liability at the end of 10th year will be 10 million. Got it or no?
Yeah.
That is the whole story of dismantling costs, removal costs, which many students find very difficult. I don't know why, but it is the thing which we finished. Any problems?
No. Just a little question. You know, when we're gonna do it in the exam, they give us this spreadsheet. We can use the Excel formulas to do this.
Yeah.
Okay.
We will use very simple Excel formulas like plus, minus, multiply, divide, not like what we are doing in our practical life, like sum, if, what if this, that, pivot tables, or this type of formulas will not be up, will not going to work. Only simple
Mhm.
formulas of sum, then plus, minus, multiply, divide. Bas, khalas. Very
Mhm.
basic knowledge is required to pass the ACC exams. Okay. Any problem?
No.
Now, your assignment is look. You will go through all the questions which we did till now. Before we move forward, your assignment is I just opened up the study hub. You will log in, you will find all the things. Okay. This is one of
Yeah.
my hubs, so I just opened in front of you. You will go in chapters. Chapter number 7 is IAS 16, okay?
Mm-hmm.
Exclusion, no need to read Khaliwali. Terminologies, it's up to you. I don't suggest. I want you to read this one, this one, this one, this one. Yani, I can make it easy. Like, you can try to read 7.2 till here, okay?
7.2. Okay.
This is your homework, this is your assignment. Before we begin in next class, inshallah, I will try to wrap up and the depreciation part also. This one also we already discussed. That goes this one also. Okay, method this, and inshallah, I will try to finish this one because only two things are left. One is major rehole and revaluation. Two small topics left. Then this
Mm-hmm.
IAS. Is it okay?
Okay.
Tomorrow, inshallah, I will try to finish it. Let's begin. Now I am going to discuss the models. We do have two models in IAS 16. IAS 16 suggests that it's your choice that you follow historical cost model. Historical cost model means whatever will be the market value, your asset will remain at the cost. What I said, your asset will remain at the cost. You will not go incorporate the market value in the books of account. Asset will remain at the cost. Halas. No other thing. Got my point?
Yeah.
Then we ask IAS, Habibi, listen. The market value, if we had an asset whose market value is going upwards, and we are looking, the market value is going up, and we would like to incorporate that market value in the books. So, is there any option? So, IAS said, yes, there is an option. We asked which option? So, IAS said there is another option which is called revaluation model. Revaluation model means you incorporate the market value every year, and you must incorporate the market value. But one thing, one thing, you must be consistent in that. Hi, what is consistent? You must be consistent in that means Adi. There is a rule. Consistency means once you follow the revaluation model, you must continue every year. You are not allowed to deviate from that model. Got my point? And it's not like
Mhm.
that the valuation is going up, you are saying we are doing revaluation. Once the valuation comes down, you are saying, no, I'm not going to do that. Oh, what is this? You must do it. Once you choose the revaluation model, khalas, you will follow it, follow it. You will not deviate from it. Got my point?
Yeah.
That is the model. Which model? Revaluation. You can
Mhm.
you can stay at your historic model, no problem. But once you deviate, once you pick the revaluation model, khalas, you have to follow the revaluation model every year, again and again. That is a consistency approach. You cannot say, oh, this year the valuation is coming down, I am not going to do revaluation. IS will give you a box, yani. IS will give you a chamat, chamat.
Yeah.
IS will give you a punch. That what is this? This is against the consistency. You must follow. Okay, Baba. Okay, IS. Why you are worried? Why you are giving us tension? Okay. Next one. Consistency is okay. The second thing is if you follow revaluation for one asset, you must follow for the whole class of that asset. That is also consistency. Yani not like that you pick and choose. This computer, I will do revaluation. This printer, no, I will not. This one, I will not. No, Baba. If you are choosing it, you must do it for all the assets in the same class. For example, if you are doing revaluation for building, for a building, for one building, you have to do it for all the buildings you own. If you are doing revaluation for one computer, you have to do it for all the electrical equipments you own under one heading, under one category, under one class of asset. If you are doing if you are following revaluation for one asset, you must follow it for all the class of asset. Got my point?
Yeah.
This is theory. That is theory that you must follow it. The consistency approach. Now, how to incorporate the revaluation, how to deal with revaluation, this is what we are going to discuss today. Revaluation, revaluation might have surplus, Surplus means your valuation is going upward. Or deficit. Deficit means your valuation is going downwards, right?
Yeah.
Green and red. Any problem?
No.
Green, Alhamdulillah. Yani is good. Red, Allahu Akbar. It's not good. Am I right?
Yeah.
Okay. The problem, the thing, the tension is the surplus or the deficit of revaluation is going to be part of equity, not the profit and loss. This will goes in OCI and equity. OCI and equity. Equity means revaluation reserve. Revaluation reserve. Reserves are part of equity. OCI is where? I will tell you. In your early studies, long back or when you finish your FA, you know there is something called SOCI. SOCI in easy language is profit and loss. Am I right?
Yeah.
Loss, revenue minus, you know the format, huh? Revenue, then cost of sale. After cost of sale, we have GP. GP means
Gross profit.
gross profit. Then we have admin expenses. Then we have distribution costs. Then some other expenses, gain on disposal loss. I'm making it very short one, okay? That is called
Mm-hmm.
profit from operations. Am I right?
Yeah.
After profit from operation, we have haram, yani finance costs, not good, interest, toba toba. And then we have profit before tax, PBT. We will have taxation. And after taxation, we have the last thing, which is known as profit for the year. Am I right?
Yeah.
This is a statement of comprehensive income. The
Mm-hmm.
revaluation is not going to be part of this format. No. Revaluation is not going to be part of this format. No. Got my point?
Okay.
After that, there is an heading, which is OCI. What is that?
OCI.
OCI, full form, other comprehensive income. What is the full form of OCI?
Other comprehensive income.
In other comprehensive, we will write the gain on revaluation, or if I write one name, which one liner, it is going to be revaluation gain. Gain or surplus, same thing. If it is revaluation deficit, which is loss, it's like that. And we will have the answer that is going to be total comprehensive income, TCI. Okay? The thing is,
Mm-hmm.
until the profit for the year, khallivalli yani, we don't care about, we will not look for revaluation. Yani, in the income statement, revaluation is not going to come. Got my point?
Mm-hmm.
Revaluation is not part of income statement. It is part of OCI. OCI. And OCI is after profit for the year. Got it or no?
Yeah.
Every transaction have two effects. The first effect of revaluation is OCI, and the second effect is equity. Equity, where is equity? Equity is in a statement of changes in equity, or you can say in SFP. SFP, we have
Mm-hmm.
capital. Capital is also known as equity, right? In
Yeah.
equity header, the heading which we will use to record the revaluation is the revaluation reserve. Got it or no?
Mm-hmm.
Any doubts?
No.
This is the journal theory. In one liner, I can say revaluation is the upward or downwards in the fair value of an asset, and it can never be recorded in income statement or profit and loss. It is going to be part of OCI and equity. What is OCI? OCI is once you complete your profit for the year income statement, then you have some things, some heading which is OCI heading, and under that heading you will write revaluation, gain or loss. Any problem?
No.
Now, how to deal with it? How to deal with it in the paper, we will discuss now. I gave you a handout in which we have some questions and we will learn the logic of revaluation with the help of that question. My first question is in front of you now. Now, what is that? The company is,
We revalue this building and assist.
yes, company would like to revalue the building. Okay, fine. The extract, the date is given, no? Which date the balances are? Which date is that?
31st December 2017.
Very nice. It is the carrying amount, no? Carrying amount, any net book value. Carrying amount
Mhm.
means cost minus accumulated depreciation is the net book value. Am I right?
Yeah.
Now, watch out the date. The date of revaluation is really very important. Which date we are having a revaluation?
1st of January 2018.
Wow. 1st of January means the start of the year or no?
Yeah.
So 2000 this and that. Only one day is the difference, right?
Yeah.
So how to deal with it? How to deal with revaluation at the start of the year? We are going to learn with the help of this question. Carrying amount is how much?
1056.
This is 31st of December 2017, right?
Yeah.
X means 1, Y means 2. This I don't know why they make that this drama, why they are not writing it like complete number. Then we have fair value. Fair value means market value. In IAS 16, we will write it as revalued amount. Okay?
Mm-hmm.
Much 1400, right?
Mm-hmm. Yeah.
Okay, no problem.
No.
Are you happy with this or you are sad? Kabhi khushi, kabhi gum. Are you happy or are you sad?
Uh, it's more, so happy.
Happy, mashallah. You are happy. Happy, happy. How much is your happiness value? Value of happiness is how much in numbers?
344.
344. That is called gain on revaluation, or you can say surplus. No problem. Okay.
Yeah.
This is going to be part of OCI and is going to be part of revaluation reserve. Okay.
Mm-hmm.
Any problem?
No.
OCI is again and revaluation reserve is increasing equity. No doubts?
No.
Okay. OCI is going to be plus and revaluation reserve is also a plus. Now,
Mm-hmm.
now the requirement. What is the requirement? Can you read for me?
Show the relevant extracts from the financial statements at 31st December 2018.
We are at 1st of January, right?
Yeah.
So extracts are required at which date?
31st December 2018.
Year ended. We have
Yeah.
assets. Always we will write property, plant, and equipment for all types of asset under falling under the head of IAS 16, right? The
Because IAS 6. No.
the valuation is 1400. Am I right?
Yeah.
But this is at 1st of January, no?
Yeah.
We need year ended. We need the data for the year ended this. Am I right?
Yeah.
So is the year passed or no?
Mm,
The the value is at 1st of January 2018. Am I right?
yeah.
The year end is 31st of December 2018. Am I clear?
Yeah.
How many days or how many months passed? Any
12.
12. Yani I can say the revaluation at the start of the year. So now 12 months passed, right? So I need to deduct depreciation for the year to get the carrying amount for the
Yeah.
year date. Yani carrying amount for SFP. Am I right?
Mm-hmm.
Now be careful. You know depreciation methods,
Yeah.
right? Which methods are there?
Straight line method.
And reducing
The
balance.
reducing balance method.
This is the depreciation we are computing after the revaluation, right? We are computing depreciation after.
Revaluation.
So this is straight line method, no need. Reducing balance will not apply. Both methods are equal. Both methods got my point.
Mm-hmm.
So there is a new method is going to be invented, and that method is the depreciation method after revaluation, and it's very easy. The formula is revalued amount divided by remaining life. What is the formula?
Revalued amount divided by remaining life.
This formula we cannot use normally, huh? Like yesterday or before what we learned, this formula is not applicable at all. This formula is going to be applied only when we are computing depreciation after
Mm-hmm.
revaluation. Got my point?
Mm-hmm.
So if I apply this formula for this one, is the asset got revalued?
Yeah.
Okay, so the what is the revalued amount?
1400.
What is the remaining life?
30.
What is the remaining life? That is a $1 million question.
Oh, its useful life is 40 years at that date. 40 years.
40 years. We need the remaining life at revaluation, okay? Not the year end. Some student tell me, sir, listen, sir. 1st January is 40, so 1 year passed. So -1, sir, is 39. No, Habibi. Who told you this? I told you remaining life at the time of revaluation. So the time of revaluation is 1st of January. And Allahu Akbar, 1st of January, the remaining life is given in this question, which is how many years? 40 years,
40.
right? Class?
Yeah. Yeah.
Answer is
35.
35. And the SFP amount is,
1365.
and this is the asset side. We have an equity side. Under the equity, we do have share capital. We do have share premium. We do have retained earnings. After retained earnings, we have anti-revaluation, right or wrong?
Mm-hmm.
Anti-revaluation reserve. Am I right?
Yeah.
How much? How much you put? Sir, we don't have any BD balance, right? Mafi. We had asset opening balance, but revaluation kidhar hai? Kidhar hai? Kidhar hai? Where are you? The opening balance of revaluation? Our eyes are now burning, but we can't see the opening balance of revaluation in that question. Am I right?
Yeah.
There is no opening. But during the year, at the start of the year, we had what we had?
344.
which is again, gain means increase in equity. Correct?
Mm-hmm.
So, ding, 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 ding. Any problem? This is what we
No.
remaining. SOCI. SOCI. We have depreciation expense. Yeah.
Mm-hmm.
Underneath it, we have a heading of OCI, in which we will write what? Gain on revaluation, which is 344. Correct or wrong?
340.
Yeah.
Yeah.
That's how we will
Yeah.
deal. We will deal with 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 revaluation at the start of the year. Any problems?
No.
Look at it from beginning till end and see if you have any concern. Please ask me. Otherwise, the next question is going to appear. Look, look,
No.
look.
This one's quite clear.
Yeah, mashallah. Very good. I have too many questions because revaluation is usually coming in the paper. It's normal. Examiner used to give the paper, used to give revaluation in the exam. You will do when we will do the past paper, you will see revaluation is appearing quite too, and you can say it's very often, Yani. Okay.
Mm-hmm.
Requirement. Next question is for zoo, we need to make the financial statements, right or wrong. Now, 1st April, the fair value of zoo's property was 100,000 with a remaining life of 420 years. Zoo policy is to revalue its property at the
Year end.
year end. Just now we learned revaluation at the start of the year. What we learned?
Mhm.
Revaluation
Start of
at
the.
the start of the year. Now we will learn revaluation at the end of the year, right?
Mm-hmm.
I will say in my style or my way that if you are doing revaluation at the start of the year, first you are working for revaluation, then you apply depreciation. Revaluation at the start means first the working of revaluation, then then the depreciation. Right or wrong?
Yeah.
But here the revaluation is at the end of the year. So first we will do depreciation. Then we apply the revaluation rules. Got it or no?
Yeah.
The end means first depreciation, then revaluation. Okay.
Hello.
If revaluation is end of the year, we will do depreciation first and then we will work for the revaluation. Okay. Now in this
Mm-hmm.
revaluation at the end of the year, right? And the valuation is 86,000. How much?
86,000.
And the balance of revaluation balance, the revaluation account opening balance, there is a surplus already available in the revaluation. Any doubts?
No.
And the next line, ignore it for now. But assume they are not realizing anything. They are saying not now, so khalli walli this line. X is
Mm-hmm.
depreciation, realization, transfer to retained earning, khalli walli. We don't talk about that now. We are not doing it now. Next question, we will learn what is that meaning. Here they are saying not, so khalli walli. Okay, ignore. Khalli walli, ignore. Okay? Can you hear me?
Mm-hmm.
Okay. Now the thing is, you have
Okay.
you
Yeah.
have value, you have the value at 1st of April 2018. Am I right?
Now I can't hear you.
What you got?
Yeah, now, yes.
Now tell me the problem. The revaluation is happening on which date?
31st March 2019.
That is the revalued amount. Am I right?
Mhm.
How-
86,000.
You are right. 86,000. At the year end, the valuation is 86,000. Tell me one thing. Tell me one thing. Are you happy with this or are you sad with that?
Sad.
No. You can tell me, no, sir, I am not happy. I am not sad. Because, sir, there is a problem. You cannot compare 86,000 with 100,000, sir. You can't. Why I can't? Why? What is the problem? The problem is they are not like as alike and they are not at the same day. Got it or no?
Ah,
So, first rule, you must write down somewhere. Like here, it was what? Carrying amount and the revalued amount. Same, no? The same day, no? One day is no problem. One day is no problem. It's okay. But it's same. But here there is a problem. The fair value is
mm-hmm.
the year and the revalued amount is at the end of the year. So first of all, bring them same, yani. You must make them same. How to do that? How? How we can match them?
Sorry, sir, the voice is cutting.
How we will match them? The answer is how much is the gap? What? How much? How much? How many years? Is it 1 year or no?
Uh, yeah, it's 1 year.
Is it completely 1 year? So in order to match it, I need to charge only 1 year depreciation. Then I
Mm-hmm.
will add the carrying amount that will be on 31st of December 2019. Am I right?
Yeah.
So can you tell me how to calculate the depreciation?
The value 100,000 divided by 20. 5,000.
5,000 and it's now.
90.
Now you can say, sir, now ask me. Kabhi khushi, kabhi gham. Yani, now you can ask me, sir, is it good or is it bad? So what it is? What it
Is bad.
is bad. So what we will say?
11,000 loss. Deficit. 11,000 deficit.
Revaluation loss or revaluation deficit of $11,000. Allahu Akbar. Any problem?
No.
We knows this is going to hit us. It is going to hit us in our OCI, and the second hit is going to reduce my equity, and it deducted
Mm-hmm.
valuation reserve. Am I right?
Yeah.
Now I am making SFP first, or if you want, I will make SOCI first. Easy is SOCI. Now the thing is, SOCI. Already we charge the depreciation for the year because the revaluation is end of the year. So first depreciation, second revaluation. Earlier what we did, it was revalued at start of the year now. Revalued at
Yeah.
start of the year now. So what we did, first is the revaluation and second is the depreciation. Remember? Yani you must remember the sequence. If revaluation at the start of the year, first we will calculate gain and loss, and then on the remaining life with a new value, we calculate depreciation. But if revaluation is at end of the year, first we will calculate depreciation on the old values, and then we will compute the gain or loss for the year. Any confusion?
No.
The depreciation is 5,000 and is part of income statement profit and loss. Khalas. After that, we had an adding OCI, and in OCI, we will write here with a heavy heart, we will inform you that you have a revaluation loss. Shareholders, don't worry, you have a loss of 11,000. No problem. Any problems? No problems?
No.
Now, the second, this is the income statement, profit and loss, SOCI. SOCI. Now SFP. SFP, property, plant, and equipment. How much? What amount is
Um,
quoted?
86,000.
86. Very good. Did I need to charge another depreciation?
No.
Why no? Because this 86 is already at the year end, so already the depreciation being charged, so no need to charge it again, right? Because it's
Yeah.
again the revaluation at the end of the year. That is correct. This is the asset side, na? Khalas. After asset side, we had another side which is equity. Equity side, we have lots of things now. Share capital. We used to have here share premium. We used to have here retained earnings. And we used to have here miss revaluation, anti-revaluation reserve. Got my point?
Yeah.
How much is the opening balance of anti? Do we have any opening balance in Auntie's account?
Yeah. 20,000.
Okay, Auntie do have an opening balance of 20,000. And what you did? What you did? You deduct 11,000 from it?
Uh, did
Oh my
Yeah.
God, I need to kill you. How much is left over?
9,000.
And that is the submission of this question. Any problem?
No.
Look at it from beginning to end and see if you have any questions.
No.
Okay. Now, this is the A part. We are done now. This is the A part. Prepare the extract and finish and this and that. Khalas, right? Now the B part is state. What we are required to state? Can you read?
Prepare extracts of XU's financial statement for the year ended 31st March 2019, reflecting the above information.
This is done now. What next? State what?
State how the accounting would be different if the opening revaluation
Now there is a issue.
surplus did
You
not
understand the part?
exist.
You understood the B part or no? Yes. Can you hear me? Yes, Komal. Did you understand the line or no? Hello? 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 Hello, Komal? What the examiner is saying that assume there is no opening balance. Anti-revaluation don't have this 20,000 opening balance. What you will do? So I am solving it like this. B part I am solving here with the green color. Okay. Now the problem is what they are saying now. They are saying that revaluation reserve don't have any opening balance, zero. And the problem is you have a deficit of 11,000, correct?
Yeah.
This came during the year. There is no revaluation available. There are no reserves available. And the deficit in the current year is 11,000. Tell me one thing. You are an accounting student. Uh, did you ever witnessed that SFP have a negative value?
No.
Not allowed at all. SFP cannot have a minus figure. SFP do have assets or they don't. SFP
Mm.
have liabilities or no. There is a liability, there are assets, there are equity or no. Negative assets, negative liability, negative equity, haram alaik, not allowed, right or wrong.
Mhm.
So like that, if we will move, there is a big problem. What is the problem?
Is gonna be negative.
And we have to state, no? State means we have to just give commentary. So what we will
Mhm.
say that, hey, examiner, Mr. Examiner, listen to me. Listen to me. In the case where we don't have sufficient revaluation reserve as a opening balance, or you can say if deficit is in excess of the opening balance, the negative figure cannot be placed in SFP. So what we will do? The solution is this 11,000 is going to be deducted from retained earning instead of negative revaluation reserve. Yani SFP can never be negative. SFP can never be negative.
Negative.
So in order to save SFP from negativity, instead of deducting it from the valuation reserve, we will deduct it from retained earning. That is the rule of IAS 16. Any problem in that?
No.
Very good. Those are small, tiny rules which you need to memorize. Otherwise, problem. Okay.
Yeah.
Now, next question will appear at your screen. Those all questions, all the questions which we are discussing today are in the handout. So don't worry.
Yeah.
The question is about land and building. Allahu Akbar. Land and building. Tell me one thing, Miss Formal. Did you ever depreciate land? Is depreciation of land is allowed? We are allowed to depreciate land or no? Yes. Can you hear me? Hello.
Hi.
Yeah. Can you hear me? Hi.
Uh,
Hello. Hello.
I still have the black screen.
Black screen. Why? I have okay screen. See, I am sharing it clear. Check now. Yes, Kamal. Check now. Kamal, check. Hello.
Yeah. Now I can see the screen.
Okay, no problem. So land can never be depreciated. Am I right?
Yeah.
Okay. Now there's a problem. Now there is a problem. The problem is land and building property is combined here. We know
Hmm.
it can never be depreciated, but the property, yes. Building, yes.
Yeah.
Start here 60 million and is the total worth of the property. Any problem?
No.
15 million for the land. Okay, fine. What else? The thing is, the entity revalued it at the start and the market value is like that, no? So this is very
Yeah.
important line. That is the start of the year and this is the valuation. Now the problem is the entity bought it 10 years prior, 10 years before the revaluation, and they provides you the cost only, right?
Yeah.
If I say 10 years prior, let's assume it's like this. And the revaluation is happening, this is like that. 10 years is like this, no? 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Okay? Any doubts? Any?
No.
Okay. So just assume the cost is 10 years prior is like that. Land, we need to write land separately and the building separately. Why? Because of the depreciation impact, right?
Yeah.
Now, the thing is, the total life is 40 years. And this is with this paragraph, which means that when they bought the property, the life was 40 years. Correct me if I am wrong.
Yeah. It was.
To round it to three zeros. So like that, what is the building value? I guess 24,000. You are with me?
Yeah.
Now be careful. Revalued amount is given to you, but that is after 10 years, right?
Mm-hmm.
And the revalued amount is given to you 15 million for the land. 60 million is the total. So tell me what is the value for the building?
45,000.
45. 45. But the problem is, I will not say problem. I will ask you, is it okay? We can compare and say kabhi khushi kabhi gum, yani gain or loss. You can,
Mm, no.
no. Why no?
Because depreciation is not there.
Because the date is not same. The cost is at some other day and the revaluation amount is at some other day. So we can't, right? So we
Yeah.
need to depreciation, but here not only 1 year. How many years?
10 years.
Wow, before it was only 1 year, now 10 years of depreciation. One question, how much the depreciation is going to be charged on the land?
Nothing.
Nothing, khalli walli, zero. Khalas. What about the building?
240,000 divide by 40.
Multiply by 10, no?
Yeah.
The answer is
Mhm. Six.
600 for 1 year, 6
6,000.
for 10 years. And I do have carrying amount, which is like versus like now.
Yeah.
Carrying amount, how much? 6,000,
Mm-hmm.
1,000, and
24,000.
one question. Are you happy with the land?
Yeah.
How much? Happiness
36,000.
on the land only.
On the land,
Nine.
9,000.
On the building, altogether you said it 36.
Yeah.
And
No.
this revaluation at the start of the year, no? Or end of the year?
At the start.
We need SFP now. SFP will be at the end of the year. Am I right?
Mm-hmm.
Now the problem. SOCI, first of all, we need depreciation for the year,
Mm-hmm.
and we need OCI auntie. OCI auntie, we do have gain or loss on revaluation. Here we have gain. So the gain
Mm-hmm.
is 56,000.
30.
What is the depreciation?
6,000.
Uh, 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 uh. This 6,000 is the depreciation of 10 previous years, right?
Yeah.
Here the revaluation is at the start of the year, right?
Yeah. Yeah.
So what need to be done? What we supposed to do? Depreciation after revaluation. Remember?
Yeah.
What's the formula? What is the formula? The formula was revalued amount divided by remaining life, correct?
Yeah.
So what is the revalued amount? So the revalued amount is 18,000, right? No, 45,000, right?
Yeah.
My question, remaining life is how many years?
10 years. 40 years.
That 40 years at the time of revaluation, or is the time at the time of purchase?
At time of purchase. So here will be 30.
So we need the remaining life, which is here 30. So what is the depreciation after revaluation?
1,500. 1,500.
1,500. One question. This is at start, so you will deduct the depreciation expense for the year. 1,500. You will have the carrying amount. Am I right?
Yeah.
And 31st of December. Land will remain same. Building is going to be, I guess, 43,500, and this one is 58,500. Am I right?
Yeah.
SFP, property, plant, and equipment, 58,500. Is it correct?
Yeah.
Look at it from the beginning till end, from the beginning till end till here, and see any tension, any confusion, any problem.
No.
Just look at it, relax, look at it, see any problems.
It's just I had a confusion with the depreciation after revaluation. So now I see how to calculate.
Now you got it, right?
Yeah.
Because it's the always remember, I gave you a hint now earlier. If it is at start, so first revaluation working will be done, and second we have to do the depreciation. And if it is the end of the year revaluation, then we will do the depreciation first and then revaluation. Remember?
Yeah.
Now there is a problem. Read the question and see there is a new thing mentioned which we never discussed till now. Just see in the question there is something new for you.
The entity's policy is to make annual transfer of realized amounts to retained earnings.
This is company's policy. Till now, how many questions we did about the revaluation? It was mentioned there is no policy. We did one question called zoo. Remember zoo?
Yeah.
What they said? No. What they said?
No.
Here what they are saying? Yes.
Yeah.
So what is that? The rule is policy to make transfer of realized gain. I will explain you what this policy is. This is like a joke. Very easy. Very easy. This is meaning is at the year end, you will deduct some amount from your revaluation reserve and you will add it in the retained earning. Realized gain means you will withdraw, you will minus some amount from your revaluation
Realize.
and
Mm-hmm.
some amount in your retained earning. That is called transfer of realized gain at the year end. Any problem?
No.
How to compute the figure? I will give you one line formula. Formula in a sentence. You do have the depreciations. You do have what? You
The
have.
depreciation.
Now listen my question very carefully, Akomal. Tell me, what was your per annum depreciation before revaluation?
6,000.
1 year. I asked 1 year.
Ah,
Six.
that's 600.
How much?
600.
Very good. Depreciation before revaluation was 600 per annum, no per annum, right?
Yeah.
After revaluation, what happens? Is the depreciation is still 600 or it got changed?
It got changed.
How much it is now after revaluation? How much is your depreciation after revaluation? We just calculated it.
Yeah. Divide by 30.
Is it 1500 or no?
Yeah.
So it was 600 and it became 1500 now. Am I right?
Yeah.
So the difference is how much?
900.
This is called excess depreciation. Excess depreciation means you will take new depreciation, you deduct old depreciation from it, and you will have an answer like here. The new is 1500, the old one was 600
600.
per annum, 1 year depreciation.
Yeah.
So the difference is 4 and 5, 900, right? So
Yeah.
9 deducted from retainer revaluation and 900 is going to be added in your retained earning. Any problem, any takleef?
No.
Now the SFP we are making here, we do have equity. In the equity revaluation reserve, do we have any opening balance? Any opening revaluation is there? No. Anti-revaluation don't have any BD balance, right? We are adding how
No.
much? How much we are adding? 36,000, correct?
Yeah.
Retain earning, they didn't tell us the opening balance, right?
Yeah.
The BD of retain earning is not given. No problem, but in the paper, definitely they will give you. But their company's policy is to transfer the realized gain, no? So
Yeah.
the excess depreciation is going to be deducted from revaluation is going to be added in the retained earnings. Got it or no?
Okay.
That is the thing of transferring excess depreciation or transferring realized gain for to retain earning. Transfer to retain earning means is going to be added in retain earning, but is going to be deducted from somewhere, and that somewhere that place is known as retain earning. Sorry, revaluation. Deduct from revaluation, add in retain earning, that is known as transfer of realized gain. Got my point?
Yeah.
And that is the submission of this question. Any problems?
No.
Your assignment is the next question from the handout. Let me show.
Mm-hmm.
See, we start this IAS 16, which is very, very, very important IAS of your syllabus. I told you earlier that this,
Mm-hmm.
inshallah, without this IAS, your paper is not going to be made. Okay. So we started it up with the cost model, how to compute cost, initial measurement, capital expenditures. Subsequently, is going to be revalued. We already discussed how to deal with depreciation, how to deal with material and labor, how to deal with straight line method, reducing balance method, and disposal of asset gain or loss on disposal, how to deal with dismantling costs or removal or decommissioning costs we are done with. And there's a small thing is overhaul cost is left. We will do it inshallah in next class. It's only 10 minutes topic. Revaluation, which is the very important topic and very vast topic we finished today. The cost model, market value revaluation, consistency, how to deal with it. Revaluation can be at start of the year, can be at end of the year. If it is start of the year, first we will do revaluation, then we will compute the new depreciation after revaluation. But if it is at the end of the year, first we will calculate the depreciation using the old values and old costs, and we will do the working for revaluation subsequently. Then the questions we did this one, that one, and this one. Now this direct, you can see direct.
Yeah.
That direct is your assignment. Try.
Okay.
And this IAS is almost about to finish. I have two questions. Like this is from one question from BPP revision kit, and the second big question is from Kaplan revision kit. We will do inshallah both of them, and that will be the Tata bye bye for IAS 16. Got it?
Yeah.
So next class we will discuss the overhaul and
Yeah.
inspection cost, and then we will start the Kaplan kit and the study hub questions, and then the topic will be completed inshallah.
Okay.
Any doubts?
Uh, no, I'll go through them. Just next week, Monday and Wednesday, I am